What's going on? Alex here, and today I want to talk about something that affects so many small businesses, and it's something that I've seen as a recurring pattern in the hundreds of businesses that I've worked with personally. Now, this has to do in particular with companies that don't have financial statements. So when they give us their records to prepare their taxes in the beginning of the filing season, typically it's bank statements. So there's no financials, just bank statements, and we have to kind of sift through and establish what's an expense, what's income, and build the financial statements from there. In doing so, over so many companies, I've noticed a recurring pattern, and this affects typically your single-member LLCs, your partnerships, and your corporations that are closely held, typically by one or two people. And that's that the amount of cash that they have on hand from year to year tends to stay relatively constant. So as long as they maintain, let's say, $25,000 in their account, they felt relatively safe, like things were okay. So they didn't really hustle all that much. They didn't go out there and sell. They didn't spend money on marketing. They kind of cruised on along. But as soon as that amount dropped below $25,000, they started to do more marketing. They started calling their clients, asking for referrals and so forth, and kicking their business into high gear until they built themselves back up to that $25,000 sort of safety point, and they didn't have to bother with doing any of the accounting or anything of that nature. The problem with that is that if they are not doing accounting, if they're not putting together financial statements and looking at reports from a management perspective, how do you know that you did well in a particular month? Now, you might have had $100,000 in revenue in November of 2018, but oh wait, some of that was money that a client owed you from October, some of that was money that a client owed you from May, and the rest of it was the money that a client owed you from April. So at the end of the day, was November an awesome month? Or was it extremely mediocre in the fact that you were just paid by clients who haven't paid you for a number of months before that? So having an accounting system in place and being able to look at management reports from an overall perspective, you could see those patterns and you could see exactly what you earned in a particular month versus the cash that you received in a particular month. So you don't have to use, if you have accounting records and an accounting system in place, a artificial cash cushion that just makes you feel comfortable that you're not going to go broke all of a sudden, that you have a few months to figure things out worth of expenses before you have to really get into hustle mode. So that's one thing I've noticed, and when small businesses make decisions, a lot of that has to do with, well, how can we make ourselves seem more like a big business, right? And small business owners do this in so many ways, right? They'll put up a fancy website, right? Big companies have fancy websites. We need a fancy website. Another thing is big companies have a machine that answers their phone. So small business owners, to make themselves seem bigger, get a virtual attendant. So somebody else answers the phone, not the business owner, and then the business seems bigger overall. But when it comes to accounting, big companies spend millions and millions of dollars on making sure that their accounting is up to date, and then they can make decisions from a management perspective given particular reports that are generated from the accounting system. And then the small business owners do nothing, a lot of them. And that's why they're suffering, because they leave out such a crucial point of their business that is killing them going forward. It's preventing them from growing moving forward. But it's easy. And there's a comfort level associated with a certain amount of cash in the account. It's kind of like that half tank of gas feeling. You know, as long as you have that much, you might be okay. As soon as it gets down to a quarter, you're going to get nervous. But why can't you hustle when you have a great month? Why can't you build on that? And not having the accounting records will put you in a situation where you're going to feel way comfortable because you got so much cash, you're just swimming in it. Why push the business further? And not having accounting records is putting you in a situation where you're not maximizing the possible revenue that you could be generating from your business because you have no idea where you're generating money, who your profitable customers are, how long they're taking to pay, which customers don't pay you for months at a time. And it's very difficult to see on a month-to-month level how you're doing in terms of how much you actually earned versus how much you were paid for other months where you worked and were not yet paid at that point. So after seeing this being such a common thread among so many small businesses, I've dubbed this the crappy constant cash method. And I think that term very succinctly describes both the means and the outcome of using this method. So as of January 1st, 2019, you have no excuse to not have some kind of accounting system in place, even if it's Excel. Make it work for you. Aside from that, there's a lot of online packages that are actually pretty damn good in the fact that once you link your bank account to it, you can import all of the transactions that essentially does most of the accounting for you. You just have to tell it what's an expense, what's income, and so forth, and it does all the work from there. And you could generate accounting reports that'll tell you how you're doing on a customer by customer basis, on a month by month basis, and that will establish for you where you're actually making your money. You can even segregate your customers into various classes, into various groups, so you could see what kind of customer is generating the most revenue for you, and is that kind of customer also generating the most profit? Because at the end of the day, profit is where it's at. So you could be generating a whole ton of revenue from clients that aren't necessarily generating you a ton of profits. That's something known as the 80-20 rule, and that's something I'll cover in a later video. But I hope this was helpful. Take this into account. Stay away from the crappy constant cash method. And if you've saved your business from this method, let me know in the comments below. I want to hear about it. Thanks for watching.